Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David and Glenn.
Good morning. Let's get to your top stories today. Stocks across the Asia Pacific on the up on these cooling trade tensions. That's after President Trump says higher tariffs on China would not be sustainable.
Both sides set for a fresh round of talks this week with Treasury Secretary Scott Bessent and Chinese Vice Premier He Lifeng meeting in person ahead of a potential Trump-Xi summit.
And a very big week in China as top party officials craft a new 5-year economic blueprint. You have third quarter GDP and monthly activity numbers coming through in the next hour or so, expected to show more signs of economic pressure.
And Israel launches strikes in Gaza and suspends all aid shipments, blaming Hamas for an ambush that killed 2 soldiers. All right, it is going to be a busy day here when it comes to the data front as well in China. First and foremost, of course, we do have the LPR and nothing really to see here in terms of the 1 year as well as the 5 year, both unchanged here for October. But certainly we're waiting for what happens to this data dump at the top of the next hour here. Before that, we have home sales. And of course, let's not forget, we kick off with the plenum here this week as well.
Yes, the plenum is kicking off today, and certainly we will be watching out for any sort of longer term blueprint as it pertains to economic priorities, technology. Urgency seems to be some of the key themes to watch out for as we get into the thick of things this week. On that very note, we started things off, of course, with unchanged as far as rates go. Very quickly, the mood across these markets, and it's worth pointing out that the dislocation in risk assets on Friday, if you look simply at the price from the cutoff today, doesn't seem to suggest that that's continuation. But when you look at certain things, we certainly have not retraced all the way back. You look at 10-year yields, for example, coming up on your screens very shortly, have been now trading below the 4% handle, the deepest relative to 4% going back to April of last year. There we go. We're now back about 4.1. We're looking at oat futures, of course. We are off there given that downgrade on France that we got over the weekend. Speaking of, right, gold continuing to see some pressure right now, 0.4%. Silver, so within the precious metals trade, we're looking at equities related to those, of course, and I imagine we will see some pressure coming through as we go into the Chinese Open, where you have a lot of the big precious metals names trading, of course, here in Greater China. We are looking at A50 futures. Keep in mind, of course, Singapore is shut today, so no A50 contract there. We are looking, though, at some upside, 1.4% there. And we do have a bond, 2 separate bond auctions today in China. We have I think it's a 2-year and a 10-year, a short-dated one, and, of course, going into the 10. But yeah, 3, rather. Thank you so much. But yeah, apart from that, we're looking ahead to economic numbers. We are also entering earnings season. And, of course, earnings reaction from some names, of course, coming through on Friday.
Yep, certainly the likes of Zijin Mining and the like that we'll be focusing a little bit more on in terms of the micro side of things. But really, this week is going to set the tone and is going to be the macro, right? But what we're hearing from this data dump, does it tell us what we're going to hear in this 4th plenum? Of course, you're not going to get the full details of what sort of concrete plans are going to be in place until maybe March of next year. But we're going to see that readout here in terms of the tone and the narrative. And certainly traders are kind of watching for some keywords, whether it's AI, whether it's Yuan, whether it's the likes of anti-involution and the like. So we talk about the data. We talked about precious metals. Obviously, given the sell-off that we saw when it came to gold and silver, we might see a continuation of that here today. Crypto certainly still in focus on that. Earnings are going to be on tap, as we talked about. CGB sales as well. And we're watching the likes of Sany Heavy as well. CIG Shanghai detail some of these Hong Kong listings that are happening here today. But yes, a lot going on this week, Dave.
Yes. Suffice to say, the next 2 weeks will be focused, the front end of the next 2 weeks will be focused in on domestic, and then we go into the sort of geopolitical external event in the next 2 weeks or so, of course, given the meeting that's taking place. But yes, so we're looking at, in the next 25 minutes, the latest numbers coming through on property prices are coming out, new home prices there. And of course, the top of the next hour, we'll be getting everything from monthly, and of course, the starting point on what the revisions are going to be for GDP.
Yeah, in terms of expectations go, I think exports will still be strong, I think, but is it enough to kind of withstand some of the the structural sort of issues that we've been talking about, right? When it comes to consumption, the retail's picture is not going to look too, much different than what we've seen for the past few months as well. Fixed asset investments, that certainly continues to be a sore spot as well, especially property investment, which continues to be in double-digit negative territory too, Dave.
Yeah, and as most of those tailwinds have largely gone away, and certainly exports have remained the pillar of growth. And as seasonally, if that goes away, there's no sign, of course, that it might. Where do we get growth as well, right? And that takes us into the broader 5-year plan and the sense of urgency cyclically that we might see show up in those numbers as well here.
Especially if we're expecting a 4.7% handle, right, which is sub 5% when it comes to GDP growth. That could mark the slowest growth we've seen in China for the past year already. And what does that mean in terms of the whole so-called growth target, right? UBS, we have them coming on at the top of the next hour saying, maybe we might see a new range when it comes to that growth target. Maybe it's not going to be around 5%, maybe 4.5% to 5% now. So a lot really hanging on this plenum and what we can get out of it. Yeah,
more definitive guide coming through out of UBS. One, they will be reacting to the numbers once we have them come through as well. So we've talked about the activity numbers coming through. I'm also looking at my charts here. So in terms of the home price numbers coming out today, HSBC, who they've been bullish on the sector for I think 18 months now, give or take. They'll be joining us in about 25 minutes once the data comes out. And we've been looking since about early 2023. Home price deflation on new home prices are set to come out. And we'll really see. They have, in fact, several picks here as far as the equity markets are concerned. So we'll get into all those conversations later on. But yes, it's a very big week going into.
And externally, right? Even when it comes to what we're hearing from both sides in U.S. and China, it looks like we're still seeing some at least more upbeat sort of commentary from the U.S. and China. And whether that sets up for a meeting between Trump and Xi in just a few weeks, right? The next round of trade talks also is set for this week. We talked about Besson meeting with He Lifeng, his counterpart of China in Malaysia, really ahead of that planned summit between Trump and Xi. And Trump did speak with Fox News on Sunday about where relations stand now with China.
We'll see what happens with China. I've always had a great relationship with them, as you know. But they're always looking for an edge. They ripped off our country for years. We're going to meet in a couple of weeks. We're going to meet in South Korea, actually, with President Xi and other people, too. But we're going to meet. We have a separate meeting set up. I'm not looking to destroy China. But China's taken out trillions of dollars, not hundreds, over the years, trillions of dollars. China has built their military because of us.
Right. Bloomberg Economics says China's 15th 5-year plan, set to be unveiled following this week's plenum, is likely to strike a more balanced approach between growth, equity, and also security. Let's bring in our team here to help us unpack of what specifically to watch as we make our way through the course of this week. Let's bring in our chief Asia economist, Chang Shu, with us here on set, and our Asia-Pacific geoeconomics analyst, Adam Farrar, joining us out of Tokyo today. Team, thank you so much for joining us. Chang Shu, let me start with you. And I want to look at the data today in the sort of the wider prism of what we are to expect from the 5-year plan. What are your expectations of how the economy is doing?
Yvonne asked earlier whether exports would be strong enough to support growth. Our answer is no. There are weaknesses across the economy. We look at the GDP data, it's likely to be sub 5% this quarter. For the third quarter, we're looking at 4.8%. And that's partly due to the data in the first couple of months, July, August, data were weak. And if we look at high-frequency data for September, again, that's pointing to weaknesses in consumption, investment. So that's the reading is going to be weak. And you mentioned weakness in the private investment. In fact, if we look at the data for public investment, they actually contracted year on year in single-month terms for 2 months already. So, yeah.
Yeah, and it really sets us up for what's going to happen in this plenum, the fourth plenum, which usually talks about what we talk about, right? It's usually one about
it's the party,
about governance, but yet this time it seems like the economic priorities have been put in the spotlight here. What makes this one different from previous plenums, you think?
Yeah, it's the timing, really, the urgency. The two major themes could be transformation and more balanced priorities in terms of policy setting. The transformation theme, that's not new. In the past 5-year plan, there's discussion of transformation, and in recent documentation, that's all about this. But the timing gives it a much greater urgency, because last year when the government was making the 5-year plan, they still dealing with this very extreme but temporary shock of COVID. But this time the government is really, or rather the economy is really facing structural headwinds. So you think about the persistent weakness in the domestic economy, you talk about very tense trade relationship with the US and potentially with some other economies elsewhere. So that's talking about really transformation is needed to change the economy to have more sustainable growth.
Just very quickly, is this the right avenue to address structural issues in the economy?
Yeah, the 5-year plan is this type of thing, that's sort of the framework, time frame
right.
China wants to use to deal with the structural issues. I'm sure the government will want to, if we do see today, the government sees the growth much weaker than expected, the government will provide some sort of short-term fixes, but the 5-year plan is really to provide much stronger, longer-term transformation plans for the economy.
Zhang, thank you. I want to bring in Adam first. Adam, thank you for joining us. I know it's great to have you here in the region. As we count down to APEC in South Korea, I think we're going to be watching what happens with Besant and Halifeng in Malaysia as well, given that we've seen this recent flare-up in trade tensions between the U.S. and China. Can they actually bring down the temperature before we get to APEC?
So it certainly appears that we're back on track for the planned meeting between President Trump and President Xi on the sidelines of APEC in South Korea. And, it's important to take stock very quickly of how quickly this has shifted. Looking back just over a week where the president was threatening 100% tariffs, where he questioned whether this meeting would move forward following China's rolling out of its new export control regime on rare earths. And so, here we see the focus clearly from the White House and the whole administration to find a way to de-escalate, and also from Beijing agreeing to this meeting following the call between Secretary Besant and Vice Minister He. So I think we're back on track, but the real question remains, how much can they really get done? What are we going to see as an outcome coming out of that meeting, and what will Secretary Besant be able to get across the table as he comes to have discussions in Malaysia?
Adam, David here. Do you get a sense that good faith has been restored going into this, is my question? Because there was a narrative that there was some level of misunderstanding between who started what, and I wonder right now whether or not we can make a conclusion that there's been a reset and the path seems to be fairly clear towards negotiations with of good faith here.
So it really depends on what we mean by good faith. I think both sides certainly feel that there's a commitment right now in this small moment for talks and for negotiations, and a desire to seek some sort of short-term de-escalation to enable the leaders to meet, to announce hopefully something of substance as they meet in South Korea. But more broadly, I don't think we have good faith. Both sides see the other as acting in their own self-interest to drive forward on these competitive maneuvers, whether that be China's export controls, the United States rolling out new additions to its entity list, which restricts the export of U.S. goods to certain companies and increasingly a large number of Chinese companies. Both sides think that despite all of their high-level dialogue, they continue to return to this cycle of escalation and de-escalation, which really raises questions about longer-term trust.
All right, great stuff. Adam, thank you, Adam Farrar there, and our very own Zhang joining us from Bloomberg Economics. And of course, we'll have more reactions from the key China data releases later on today. We'll be speaking with HSBC right after those home price numbers come out. At the top of the next hour, we're going to get more from UBS Investment Bank on the third quarter GDP numbers and, of course, activity data there. Ning Zhang joins us just in moments away.
Right, welcome back. The reference rate of the day just out. Another sub 710 handle, 709.73 there against the US dollar is the midpoint of the day. We are looking at, can we get futures up as well? We should be up there as we go into the open today, 13 minutes away. Following that fairly big wobble in equity markets on Friday going into the US session, precious metals as well got sold off quite substantially. Let's get a setup for the week. Joining us here on set, Joshua Crabb, head of Asia Pacific Equities at Robeco. Good morning, sir. Nice to see you.
Morning.
So we are looking at, I want to start up with China. We have a 5-year plan that the fourth plenum is starting today. And I wonder, is there a market catalyst you think we might get from that?
Yeah, I think the reality with these events is you don't get much during the 3-day session, and at the end you get a little bit of detail. Then a week after that you get a little bit more detail, and then in sort of like usually around March next year you'll get sort of like, I guess, a bit more sort of more detail in what they're actually going to look to happen when it gets approved. So people will be looking, and I think there will be little parts of excitement around that. Particularly on where that sort of focus is going to be.
What in particular are you looking for in terms of catalysts then? I mean, what could extend this rally in China now?
I think the big thing that people will be looking for is, are we going to see anything on the consumption side? I think, people have been, fairly familiar with, the sort of upgrade cycle and focuses on parts like technology, and there'll be, nuances in that that will drive some other things. But I think consumption will be the part that people are really looking for.
On tech, one of the things that we've been told the last 2 weeks or so is the market has behaved rationally. In other words, the part of the Chinese equity market that's tied largely to the economy hasn't really done too well. Tech obviously has had its own, dancing into its own tune. Do you think that re-rating in tech can continue despite the doldrums in the economy?
I think what we need to see is a bit of a change in the sort of overall domestic economy. I mean, we've seen this in many places where you can get leadership, and as we know, markets can often disconnect from the economic fundamentals. But I think from here, we've obviously had quite a reasonable move in markets so far, and it'd be good to see that spreading out into other areas of the economy.
So it sounds like you're not too convinced.
Yeah.
For me, I think, again, it's interesting. If we go back to the back end of last year, everyone hated Asia. What did they dislike? They disliked Korea, they disliked China. What have we seen? We've seen good performance from those markets. Yeah. So for me, I think as those valuations have moved up, you've got to go back to the fundamentals and say, are the fundamentals improving sort of fast enough? And yes, in the tech space, we've seen a bottoming out in earnings. We've seen some improvements and some focus going there. But it would be good to see that sort of expanding to more parts of the economy. This always takes time, as we know, and markets do tend to move ahead of the fundamentals, but it would be good to see that coming through to help with some of the valuations.
Where do you think the next sort of sector leadership is going to come from? So if we get that rotation, that improving of market breadth away from the big winners, where do you suspect that's going to come from? And how do you position ahead of that, if in fact that is the
specifically
the
in China, or is this a
greater Asia, let's say, because you mentioned Korea as well. That seems to be the whole tech AI re-rating taking place in that specific market, but we've seen that in several spots across the Asia Pacific also.
Yeah, look, I think there's a couple of different drivers. It's sort of easy to look at it as one sort of component, but I think, for example, in Korea, we had the concern. We saw martial law last year. We've come out of that. We've seen support for the value up programs. We've seen changes in the commercial code, and I think that's been driving quite a lot of that. And then clearly, obviously, we've had that sort of AI backdrop as well. I think if we look for markets like China, I think what you had is very cheap valuations. People were very negatively positioned. Those expectations started to bottom out. Right. We saw some earnings beats in certain parts of the market after a long period of sort of downgrade. So I think it's been different drivers for different parts of the market. Markets like India have been they were a bit of a favourite last year and have been a bit weaker. We've seen the GST cuts coming through there, so people are going to be very focused on, do we see an uptick in consumption in those type of markets? And I think ASEAN's been the one that people have just really ignored for a long period of time. Valuations have got very, very cheap. People do, probably see a lack of catalyst for now, but these things can change, as we saw with Korea and we saw with China last year as well. So I actually think there's a lot of diverse alpha sources as also potential in the region, and it's going to sort of depend a little bit on how the market direction moves as to which parts are going to probably be the better performers.
So what do you base on? How do you pick out the winners and losers now? Is it purely on valuation, or are you looking at other sort of themes as well right now?
Yeah, I think valuation is always something that's a nice to have, and there's always something that can generate change. But markets are very, very focused on catalysts, and particularly in the short term. And I think that is where that focus is going to be. So again, if we see, taking the example of India, if we see some consumption pick up on the GST cuts after some underperformance, the focus will go there. Okay. If we see something happening more on a fiscal side in a market like Indonesia, you might see some focus go there. I think with China, we've got the plenum. People are going to look for that. So details will be relatively brief, at least to sort of start. But earnings continue to happen. And if we do see earnings beats, getting back to your point, you can see that sort of continuation, the momentum that we have seen.
What's your sense of how receptive investors, foreign investors, that have just come to they've gotten used to just the U.S. outperformance over recent years, and how they're looking at your cohort of equity markets?
Yeah, I mean, I think this is probably the biggest question. We've had the best part of a decade where, Asia's done okay, but you've just had the standout U.S. exceptionalism. And a big component of that has been the re-rating. Now, a lot of the re-rating has been done by the nature of markets, so you're going to have to be reliant a lot more on earnings growth and dividends to sort of drive that market, whereas we still have a lot of cheap markets in Asia. And I think that's where, again, with the US cutting rates, so you will have sort of monetary stimulus coming through. We don't have the inflationary issues in this part of the world. There is fiscal room to maneuver in many of the countries. Again, we've seen that in India recently with the GST cuts, and that could actually drive a bit more interest. And I think that will be interesting to me, because if we come to January and people look at the US underperforming for the first time in the best part of a decade, and they start thinking about, should we take some profits in what's been a very good market, start to reallocate to some other areas. So I think Asia could be interesting, not just this year, but also into 2026 as well.
All right, Joshua Crabb, thank you for kicking off the week with us, head of Asia Pacific Equities at Robeco. Taking a look when it comes to your pre-market here right now, of course, as we count down to, of course, the home price data out of China, the data dump at the top of the hour. We actually are seeing the Hang Seng looking pretty good.
Very nice.
We're up some 600 points or so here. So happy Monday. A50 futures are also in positive territory here this morning, and 712 for your currency. This is Bloomberg.
Welcome back. Yes, we are getting that bounce, and quite a bounce we are seeing in the early goings here. 4% on HS Tech following the routes on Friday. Every single stock on the Hang Seng Tech Index is up early, so we'll see whether this has any persistent and lasting power today.
Yeah, and that's despite the fact that we're expecting some pretty softer numbers when it comes to the eco side of things coming up. But yes, I think it's because of what we're hearing from the trade talks, right? From what we just heard from our colleague Adam Farrar, it seems like these trade talks are back on track. Yeah. And what we heard from President Trump in that Fox News interview was that he's planning that still to have that meeting with President Xi, and it's going to go ahead in Apex. There you go. Big movers when it comes to tech here. Alibaba, Baidu up some 5%, Tencent's up 2%, JD's up another 5%. So certainly tech still remains to be one of the bright spots in this market, and we're watching still gold. Now, despite all this kind of optimism around growth and AI, we still see growth. When it comes to gold, that one thing that maybe people are still looking at, HSBC raising their gold forecast to 5,000.
Yep, in 2026, the latest bank to do that. The opening bell is coming up next. Good morning. Welcome back. You're watching The China Show. 40 seconds to the opening bell. Just to mention, in case some of our viewers might have missed that already, there was an incident at the Hong Kong airport early this morning where a cargo plane skidded off the runway. We'll get you more updates on that later on. But yes, we do understand we'll get more updates from the Hong Kong Airport Authority officials. They're coming through. Not to start the show with some fairly negative news, but just to get you that out there as well. That is something that we're tracking going into the thick of things today.
Yep, that certainly is one thing to watch. And of course, as we count down to a pretty busy week when it comes to data in China, when it comes to this plenum that kicks off today as well. So we just got, when it comes to the LPR, unchanged in that front, but new home price data and used home price data is going to be happening any second now. But before that, let's get to the market open, because you are seeing plenty of optimism and seems to be, renewed optimism really around trade talks, I believe, could be driving all this, right? Because you're hearing both sides really start to see that, maybe these trade talks are on track and that we're going to see a meeting between Presidents Trump and Xi at APEC in South Korea. So there's also going to be ongoing talks between He Lifeng as well as with the Treasury Secretary Scott Bessent. So I think, all signs point to at least continuation of discussions. That is enough, it seems, to help with sentiment here today. You are seeing bonds being sold, equities being bought. CSI 300 were up about 0.8%, and tech still remains to be that key driver. Look at Cambricon Technologies. We're up more than 3% here right now. HS Tech, we're just talking about all stocks in the pre-market were basically up, and we're seeing outsized gains. So that seems to be still the leader today. Take a look at how Hong Kong is doing before we bring in that price data, because it seems like right now we're not really caring too much for the data right now. You take a look at it, right? Alibaba's at 4.5%, Baidu is at 4%, Tencent, Xiaomi up by 2%. So there you go. We are seeing really punchy start to this market here on this Monday morning, Dave. Yeah,
I mean, this really underscores what the market's been trading on or not trading on, right? So the tech space has largely been correlated to, not largely been correlated to the equity market, to the underlying economy, but just to say also that this is a reminder, this data that's come through right now is a reminder that the economy is not firing on full cylinders right now. So we're looking at home price numbers. I'm going to give you guys a number, negative 0.41% month on month, which is a faster drop than the previous month. And just for context, is also, okay, there we go. This is the steepest drop in 11 months by my count. You have to go all the way back to October of last year, when prices were falling by about 0.5%. We're now down by 0.4%. So this is a sizable drop in home price numbers that's come through anyhow. And used home prices too, Yvonne, if you're seeing anything on that front too. Also seeing a drop that's faster than we saw in the previous month of August, right? So we're talking about a contraction of used home prices from 0.64% month on month. So in fact, it's probably, these numbers look a little bit worse for the used home prices than new right now. So not much has really changed really here in terms of the property side of things. In fact, you could make the argument that things are actually going the opposite way in terms of just prices themselves. Let's bring in Michelle Kwok, Head of Asia Real Estate Research at HSBC. Good morning, Michelle. Nice to see you.
Morning. How are you?
Very well. Not as good as the data. Initial glance, what's your reaction?
Well, I got to bring you back to the so bad is good narrative.
Okay.
We've been talking about it for quite some time. We've had, unfortunately, a little bit of a data deterioration starting back in April.
Okay.
So we had good 6 months since fourth quarter last year.
Right.
Up until now, things have not been exactly as I think the market would like to see. But at the same time, what poor data actually reflect is the market will reprice expectation of policies again. And we've got the plenum, upcoming. So I think the market will conveniently try to find an excuse to think about, after this recent pullback, how can they rebuild position in the China property space.
Do you get a lot of talk about property stocks? I'm just taking a look at this rally in tech, and I think that's overshadowing everything when it comes to what we're seeing domestically.
Sure.
Right? I mean, is there much interest really in really investing
I would think that interests have sort of moderated the last 2 months for a very simple reason. Property stocks have done well year to date. And so from HSBC's perspective, we have already asked clients to sort of take profit back in August. It's hard to think about what that next catalyst is if you were to not to pin down to policies. We don't have good data coming through. And don't forget, we have a very high base, October. We had a stimulus September last year. So fourth quarter this year, on a year-over-year basis, is going to be a high base challenge. And I think the market knows that.
Yeah.
So unless the government talks on a high level about how they were to stimulate demand again, it's very difficult to get the market excited again, similar to what we have seen probably in the earlier part of this year.
Is that, you think, what we will get, that the policymakers will be discussing this at a very high level? Because it does seem, based on the data, that they might need to take that next step.
I do think that if we have liquidity sort of moderating, liquidity is actually key. Home price data, I would say relatively so, less so important. But if you don't have transaction volume, that makes policymakers probably a little bit more nervous.
And what are you seeing on that front specifically?
I think that what we have seen is October data. If you look at the top 30 cities, it's actually been somewhat weak. Not really a big surprise, as I discussed, is because of the high base. But what we also take comfort from is the listed universe, the state-owned developers. They have actually been able to deliver respectable results.
That's right.
So what we have in the next 2 to 3 months of the year is a couple of high-profile projects coming through. So if the market can demonstrate that, hey, in the mid-high-end market, the demand is still quite solid, then that would serve as a point to validate the expectation that this stabilization in the housing market will indeed continue to play out.
Okay. Is that how you separate the winners and losers now? I know you amidst this re-rating, you're saying maybe take some profits, but you've also downgraded some, and you have some preferred plays now.
So we downgraded several, and we only have 3 names left as buy-rated stocks in our developer universe. And we just got to go very, very bottom up here. You just got to look at earnings. And one thing that actually makes me very comfortable about being in these stocks that we have buy rating, CR Land, CND, and Season, is because we feel that they have an underlying story to sell. The earnings is going to recover progressively through 2026. And with earnings recovery now, the market will feel comfortable that if earnings were to grow, that PE is to roll over. So I think that we're at a point whereby this recent pullback is very, very healthy. We've had the rally as per our expectation, this pullback being healthy, and then the market can reassess what the risk reward is towards year end.
Yeah, you see REITs. That's the other thing, but that's related as well here to why you like these 3. Just help us understand that.
Definitely so. So among the 3 names is China Resources Land and Season, the 2 mall operators that we like that can be linked up to the C-REIT theme.
Okay.
C-REIT is very meaningful because it's effectively a capital recycling story here. The market cap grew 4 times since 2021. And what we have seen is that on top of CR Land, which has the most visible pipeline year in, year out, you also have Kohli, China Overseas Land, effectively on a factual basis coming through with strong subscription in its upcoming C-REIT. And so effectively this capital recycling story is to help these developers really unlock the value of their commercial real estate.
How much interest are you getting? Is it mostly just from,
Local,
international investors, or are you saying local demand?
There's actually a lot of international investors because they understand that if this C-REIT market is to continue to grow in a very rapid pace, that is really going to impact capital allocation. At the moment, it's only predominantly onshore investors that can participate. So these stocks are listed, these units are listed in Shanghai or Shenzhen. So if you are foreign investors, they care. And we have had numerous requests from these global long-onlys, not necessarily based in Hong Kong, asking about the C-REIT market to understand about the potential implication for onshore investors still looking for yield. If this market were to grow, how is it really going to impact the sponsor of these companies? How is that going to help them unlock value and potentially drive upside in valuation?
If it's doing that well, do you expect more supply of these things to come to market? What's the catalyst for that?
I think these developers, sponsors, you just have to act very fast.
Okay.
You're always a winner if you're early. So we have a few early movers in this space, but I think clearly what we project HSBC is that this market could top 2 trillion. So
what is it now?
Fast growth, 400 or so billion. So it's very, very
5X,
fast growth. So what we think is that for this market to be very meaningful, these developers should have to think about how they were to unlock value in the pipeline.
Right.
But of course, very delicate balance. If they spin off too quickly, what's left in the company? So a delicate balance in helping the market unlock value, but at the same time keeping what to them is very meaningful as a very key source of recurrent income.
You're expecting, before we go, fourth quarter sales could decline by 40% year on year. Given that number, how intense does the stimulus have to be to spark some sort of re-rating? What form of stimulus would you want to see?
I would want to see, well, first you just need to think about implementing the existing policies right. So the government can speed up the pace of special bond issuance to acquire inventory. But I think the other very big element that I think would really be a game changer is if they can think of a way to restore household confidence. Because at the moment, households are not leveraging.
Yeah.
We can unlock that and encourage households to take on leverage again. That would really be a game changer for the market. Because at the moment, households are not putting down the minimal down payment. They're putting down a lot more than what's required on a minimum basis. So if they can leverage up, they feel good about job security, then that probably will be quite a big driver for the housing market.
Well, I mean, because right now what they're doing is they're taking that leverage and putting it in the stock market, right? There we go. You read my mind. So, last question for you: the risk of looking at a single number for China. In this case, it's negative 0.4%, right? It's such a big country, so many cities, so many price points. Like some of the things tend to get missed.
The granular things.
The granular things, right? So things like, what are you seeing as far as housing starts or construction starts, and the whole fear that we had just 12 months ago about projects not getting completed. Do we have any update on that specific part of the story?
Well, I think the one update is that completions, as we discussed with some of the distressed developers, they are already pushing through. They're at the tail end of what they have to fulfill.
Okay.
They have predominantly, I would say, more or less done with distress sort of restructuring of their debt portfolio. So that's also taking off, making you feel comfortable about the tail risks. And what's next? You want to see land banking activity continue to pick up. We've had a fairly good year, but of course concentrated in the big cities, right? So if you ask me about one of my biggest fear is at the moment that could potentially change things from here on is the biggest and most resilient part of the China housing market at the moment is the higher end market. So upgraded housing demand. If that part of the market started to moderate, I would worry about what the thesis would be and what continuously would drive the stabilization and the recovery. But at the moment, that's what's holding the market up.
Right. On that note, Michelle, thank you so much. Michelle Kwok there, Head of Asia Real Estate Research at HSBC. For our Bloomberg clients, you can turn to your terminal for more on the story. TLI we go. So we've just passed through the second significant data point, one which was the loan prime rates. Home prices are out. And of course, top of the next hour, we have this flurry of economic data set to drop on the Bloomberg terminal. Check that out. The blog is ongoing right now. Plenty more ahead. This is The China Show. Good morning. Right, so welcome back. Let's turn our attention now to earnings. We're entering fairly full swing as it pertains to the Chinese markets. You have chip maker Cambricon swinging massively into a profit here in the third quarter. The firm is now expected to end the year in the black as it benefits from demand for its AI products. Let's bring in our breaking news earnings specialist, Rachel Yeo, joining us to help us unpack these earnings from Friday and what it means. Rachel, good morning. Thanks for joining us. What does these strong results actually mean for the company and the broader chip sector in China?
Yeah, so Cambricon's strong third quarter results is actually one of the starkest signs yet of how the China's domestic chip sector has been increasingly benefiting from a national drive to replace restricted NVIDIA gear during a domestic AI boom. And we can also see from third quarter earnings, sales have swung, have seen a 14-fold rise as well. And this Cambricon is also one of the more prominent Chinese tech firms that have risen to the fore, especially partly thanks to sanctioned US technologies. And we can also see that many of the US technologies have been remaining off limits for a lot of Chinese AI developers, moving from ranging from Alibaba to DeepSeek. So a lot of these firms have been increasingly relying on such domestic alternatives to train their AI as well. And this is also something that investors have been, seeing potential in, and it has been dubbed as like China's next NVIDIA firm amongst retail investors as well.
Yeah, there's sort of narrative that these chip makers in China are benefiting from, of course, these trade tensions. And certainly you're seeing that reflected in the results. Tell us about the guidance. What's the outlook looking like here when it comes to Cambricon now?
Yeah, so moving forward for earnings guidance, I think the trajectory will still is still expected to be pretty good for the next few years ahead. So earlier on, the company gave a full-year forecast of between 5 to 7 billion yuan. So that is also significantly performing better than how they did the year before. And if you can also see net income estimates compiled by Bloomberg earlier, we can see that net income estimates for the full year in the next 2 years will also be on significantly higher than how it has been doing in the previous years earlier. So we can see from such improved estimates that a lot of the AI demand in China is set to stay for a while, and much of its outlook will also hinge on how policies in China will continue to shape out to continue supporting its domestic chip makers while also relying less on US technologies coming ahead.
All right. Rachel, thank you. Interesting to see, though, the stock, Cambricon, it was up quite a bit in the initial open there. Now we kind of come back a little bit now, and we're just seeing just marginal gains right now. Rachel Yeo, though, joining us out of Singapore, our earnings specialist. And we're taking a look at when it comes to some of these gold miners in this part of the world. And, yeah, you're seeing quite a sizable drop here, really following what we saw in this rout that we're seeing now in gold and silver and precious metals overall in general here. We're seeing a little bit of recovery in the gold spot prices, at least now in the Monday session, but it was pretty bad on Friday. So we are seeing a bit of a follow through on that. But yeah, Emerald Resources, for example, we're down 8.5% here right now. Let's check Zijin Mining, Zijin Gold, of course. We saw both companies report strong results with the likes of Zijin Mining profit really jumping 57% in the third quarter. We are seeing Zijin Gold, though. We're seeing two kind of tails here. Mining is doing a little bit better. Gold, though, is down some 5%. Let's get to Martin Ritchie, our metals and mining reporter, joining us from Shanghai to break down these results for us. Martin.
Yeah, another milestone in a year of milestones for Zijin Mining. The net income in the third quarter was equivalent to about $2 billion. So it's record profit for them. They're China's biggest mining company and now one of the world's biggest. And they're in a kind of sweet spot because they produce a lot of copper. Prices are high there, and they are boosting output of gold. And as you know, gold has been rising to record after record this year. So all round, it's a pretty powerful result for Zijin. And the outlook looks good with a lot of people bullish on gold into next year. We've seen HSBC just over the past few days say that they think gold's going to rise to $5,000 an ounce next year. So Zijin has built itself into a miner, that's got the same market value roughly as Rio Tinto, a much better known name.
All right, Martin, thank you so much. Martin Ritchie there, our metals and mining report. As Martin just pointing out there, in the last hour, HSBC, just on the broader gold price, upgraded their specific target or projection for gold to 5,000 by 2026. Now, back to earnings very quickly here. A big look, a look at earnings coming through across the region. CATL, and this includes, of course, others, including in the region. SK Hynix is a very big one to watch. Bangkok Bank is one, of course, in ASEAN, and among many other names, of course, coming through over the next few days or so. Plenty more ahead. This is The China Show.
All right, we're just less than 10 minutes away from that data dump coming through for China. And yeah, when you take a look at how the home price data looked, I mean, it did show not a pretty picture here. In fact, you're actually seeing steeper declines when it comes to new and old home prices. So that side of the economy is still looking quite weak. In fact, you take a look at how big those drops were. What we're seeing in terms of the overall headline figures for GDP, the estimate is still for under 5%. 4.7 is what the median estimates are looking like. But when you take a look at industrial profit, profit, retail sales, fixed asset investments, those are looking at pretty weak numbers as well.
Almost across the board, right? If you look at this, in fact, the GDP print, I'm looking at a range here of 4.3%, as low as 4.3, and the highest is barely above 5.1%, I believe, is the forecast coming through here out of Finasia Securities. BNP is the second one at 4.9%. But yeah, it really begs the question of, well, it really puts the fourth plenum into, I think, more significant context here, given the cyclical urgency that usually isn't reflected as clearly in a five-year plan, because a five-year plan typically is more structural, but this does underscore the structural changes that they might need to address fairly higher up. If you look at, I think, to the point you're making, right, the cyclical and structural weakness we're seeing in the property market. Now, while we've pulled back from the very edge of, our project's going to be completed and all these other things, that's no longer the story. Prices are not responding just yet.
Yeah, and as HSBC's Michelle Kwok told us, right, it's so bad that it's almost good now. That narrative might be reemerging in the property space right now, that we might actually see some urgencies from policymakers on some sort of stimulus moving forward, right? So bond issuance, like everything that she talked about on what her wish list is. But when it comes to this plenum, right, I think what traders are looking for is any signs of, AI, right? If we see any more sort of talk about this being a priority among policymakers,
industrial policy,
about anti-involution as well. I mean, and even things like consumption sector, I think those are some key catalysts and key sort of policy sort of movements that really could extend this rally if possible.
Yeah, because usually the fourth plenum does not include the five-year plan. That typically comes in the fifth plenum.
Yeah.
There was a shift in the agenda.
The third one was delayed.
The third one was delayed because of the pandemic, I believe, right? So here we are now looking at the five-year plan, which is quite fitting because it is 2026 already next year if you think about it. So I think it's 7 plenums within the five-year plan. There we go. That's just to say we have a trader's guide out on Bloomberg Terminal for our clients who are more interested in really looking at the granular nuance here of this fourth plenum that's coming out today. All that is to say, watch it closely. That starts today. Back to the here and now, this rally that's taking place. And I think this is really the juxtaposition of a tech rally that is not really focused on the underlying cyclicals of the economy, but more on industrial policy and tech, as Yvonne is pointing out. Really good bounce today, 2.6% to the upside. Gold, as we were just talking about just now, seeing a bit of a bounce, but over a 3-day look certainly does show you that we're not back to levels, of course, that we were closer to on Friday. We're looking at several other things. So in a couple of minutes, we'll be getting the latest data dump, the fourth quarter GDP numbers, and within that, of course, in the property sector, also year-to-date investments in the property sector. Lots more on the way. You're watching The China Show. Good morning.
Welcome back to the China Show. We are just a few moments away from the activity data for September to drop on your terminal screens here right now. In the meantime, though, keep carrying on when it comes to this rally, right? Let's take a look at how the trade tensions and the like seems to be cooling down as we count down to APEC. What we heard from President Trump in that interview from Fox News saying things are fine with China. He still expects to meet President Xi in just a few weeks. So I think that in itself was enough to really get this growth sort of rally kicking in once again and really reemerging. Tech is hot once again.
Yeah, I think we're up 2.6% on the Hang Seng Tech Index. Last we checked, every single stock was up there. And really the lowering, to Yvonne's point, of the temperature really helping equity stage a fairly decent base for a rally today. So this time next week, we heard from Secretary Bessent of that meeting, of course, with Ho Li Fong in KL, of course, in Malaysia, ahead of what seems to be now still a meeting taking place between the two presidents in Korea. Now, apart from that, we're also in the thick of earnings season, and apart from that, we're also waiting for some economic numbers coming out of China at some point today. And I think we do have one of the data points already that's come through.
Year-on-year numbers for GDP.
Yes, here we go.
4.8%. So it is a cooling and a slowing down, but better than expected. Year-to-date numbers is 5.2% for GDP. So There you go. Seasonally adjusted is 1.1. So it's actually better than expected numbers, at least for the headline third quarter GDP for now. We're looking at things like industrial productions also looking better than expected, Dave.
Yeah, here we go. Okay, this is a pleasant surprise. So industrial production coming in at 6.5%. The consensus was for 5%. We're looking also at the jobless rate has also actually come down to 5.2% from 5.3. 5.3 was also the estimate there. It's really, though, in property investment that continues to be the drag with a drop year to date of close to 14%. We were expecting negative 13.1, so that's one actually is accelerating. What else is standing out to you here?
Retail sales still, I mean, you could say 3% year on year, so that's bang in line with what economists were expecting, but that continues to show a bit of a slower momentum there on the retail side of things. The year-to-date numbers slightly better at 4.5% for retail sales, but still that continues to be maybe a sore point overall. So that seems to be what we're seeing so far in terms of what we're seeing in dollar China. Not that much movement in reaction to some of these numbers. Anything else on your radar here?
Yes, I'm just looking at the range of forecasts. This is actually surprising. The range of forecasts on industrial production, the highest was let's call it 5.5%, 5.6. So the 6.5% print on industrial production seems to be the early standout in the data, beating forecasts, the highest forecast by almost a full percentage point here. So this one actually may be underscoring industrial demand. Might go in, we have to look at the data, but it might go into the whole exports picture too here.
Yeah, let's bring in Ning Zhang now, senior China economist at UBS Investment Bank, to walk us through what he thinks of these numbers. Some surprise to the upside.
Very good numbers.
What's your take?
Yeah, sure. The bottom line here is that the growth slowing down, but with huge divergence, which means, as we can see from data, the exports and industrial production beat expectation, but domestic economy like retail sales, investment, all slowing down. So that's a very interesting picture from Q3.
Okay, is there anything we can glean from the data now in terms of what policymakers' future response might be to your point? A slowdown that seems to be accelerating overall.
Yeah, sure. The policy momentum is set to accelerate because now year-to-date growth will be around maybe 5%, but the Q4 growth will be more challenging than Q3. We believe there will be further deceleration in Q4, possibly close to 4% growth, which means the annual growth target of around 5% may be jeopardized. That's why possibly the government need to prepare something new, policy stimulus, to offset the headwinds from domestic economies to make the growth targets more achievable.
Won't exports offset that weakness? Do you think exports will be able to bridge the gap?
Frankly speaking, exports has been very robust year to date, 6+ growth, right? But Q4, we will have the high base effect. Last Q4, we have 10% export growth. And also, in terms of the payback of the front loading previously, and even with some renewed uncertainties from U.S.-China fronts, I believe exports may decelerate. It's not good enough to fill the gap.
Okay.
So that's why it's still very challenging.
Is that going to be when we see the fourth quarter, the payback from the front loading? Or is there something else going on when you're seeing these robust export numbers?
Yeah, there's some ongoing payback of front loading previously. But clearly, if you look at the data elsewhere, from ASEAN, from Europe, even from US, global growth actually has been a little bit better than previously expected. That's resilience, I believe, where we find it very come from.
Okay. Now, the fourth plenum, that begins today, and we have the 5-year plan that they will be talking about, of course, internally, and they'll be fleshing that out. Is there anything on industrial policy that markets can expect from the next 5-year plan? Because industrial policy seems to be the main driver of market sentiment as it pertains to China, for example. So I'm wondering if there's anything from this 5-year plan to look forward to.
Sure. Before talking about the policies, I believe we need to look at the so-called what's the growth target. The 5-year plan...
For next year, you mean?
For next 5 years.
Next 5 years, okay.
So, for the new 5-year plan, there will be no explicit explicit growth target, which means no target for 5 years. Okay. But we have the implicit target, maybe still around 4.5 to 5%.
To a range.
A range. But clearly it's a very decent one, right? But slower than previous 5 years.
Right.
Because China still try to, make the GDP per capita quite decent in next 10 years, double GDP from 2020, etc. So that's very needed for decent growth, which means the growth is very important for next 10 years. And going to the industrial policies or even other policy fronts, we need to see maybe very interesting key micro themes. Number one, innovation. That's a top focus for next 5 to 10 years. And number two here is about anti-evolution. To revive the inflation and the corporate profitability. That would be very important to rebalance the demand supply in China. Number three, that's the consumption policies, which means linked with the social welfare, social safety net, investing in people, try to rebalance China internally. And the next one could be around promoting Chinese corporate going global, further opening up to compete with global peers, get high ROEs. And also the other one could be, again, decarbonization. China has still a long-term ambition to push up the new energy share in the GDP, in the total energy structure. That's still very, very evident.
Yeah, the market right now, though, Ning, Zhang, is not really pricing in aggressive stimulus.
Yeah.
What do you think could actually move the needle in terms of really getting people more excited about maybe extending this rally or chasing this rally further? In terms of short-term consumption or policy-driven sort of move, what would you be expecting? Specifically.
Sure. The trigger, for sure, for the macro data, that's the GDP, which means if China is not to achieve the GDP growth target, the government may feel some pressure to rule out some additional ones. The very interesting angle here should be housing market. Housing price continue to decline and cross board. Housing activities, new starts, sales, investment, all down very sharply. That's a very, very significant so-called trigger. We can expect in the future the government may reconsider, how to address the problem. In terms of policies, we can see maybe at least 3 fronts. Number one, ongoing push is a quasi-fiscal channel support, like policy banks issuing special bonds to support the infrastructure and strategic industrial projects. The other one is last weekend, the Ministry of Finance said, we have another 500 billion new quota for local governments to issue bonds. That's beyond the fiscal deficit this year.
Right.
And for me, I still see maybe in the next 2 or 3 months, PBOC can still cut interest rate by 10 BPs.
Okay, so on property, so what we've seen this year is many of the major Tier 1 cities have really relaxed their restrictions for purchases. So I guess I'm wondering what else hasn't been announced to get, to turn the property market around, or have we just not waited long enough? Because I think it's somewhat unfair when you look at just one number and say, things haven't actually improved based on prices. But, things like, people are less worried about their houses being completed. The small sort of granular stories seem to be at least improving from the worst case scenario. So, where do you think we go from here? What else needs to be announced?
Frankly speaking, the government has done quite a lot. In the previous several years, and now the problem here we face are 2 things or 3 things. Now, number one is still about expectations for future housing prices. Number 2 is elevated inventory level relative to sales. And number 3, of course, that's the diminishing momentum of the policy stimulus from the previous strong one in last Q4. So what we can expect in the future, the first one, of course, still lowering mortgage rates alongside with possible PBOC cutting interest rate. Still very helpful. Number 2 here, so local governments need to accelerate the pace of destocking program to rebalance the demand versus supply in the housing market so that the housing prices at least could stabilize gradually. And number 3, of course, central government need to do something more, like accelerate the urban village renovation program, or even try to send more positive signal to everyone, anchor the expectations.
In terms of expectations on trade talks, I wonder what you are looking at right now. We see things are flaring up and then they cool down and then they flare up again very easily, it seems. And at a time when people look at the U.S. and say that there is no China strategy right now, what are your expectations for these talks that are happening in South Korea and beyond?
Sure. Our baseline still assume the U.S.-China leadership talk remains possible. But it requires, number one, is further kind of efforts to de-escalate the tensions. Number two is some regular communication channels, like our Vice Premier and the U.S. Treasury Secretary. They will likely meet this week, right? So this kind of efforts could facilitate this kind of potential leadership meeting. That's why it's still possible. But beyond that, clearly, it's still too early to say China and the U.S. can reach a comprehensive deal. I don't think it will happen very soon. It will still need at least several quarters. That's why the best case, maybe on the potential upcoming meeting, will be some de-escalation of the recent escalations.
Yeah.
And plus...
I'm losing track already of this.
Yeah. Plus, both sides agree to extend the trade talk period by another maybe 1 quarter, 2 quarters, to make both sides maybe still have some time, some room to discuss, to negotiate. And I believe that will be bumpy way ahead. But the bottom line here is that the 100% additional tariffs are not sustainable, are not affordable for both sides.
Right.
So, but still, that's a long-term kind of a debate about U.S.-China relationship.
From a purely economic standpoint, does China need a deal? What's the upside if they get a deal to the economy?
Of course, so-called smaller, better than nothing, which means nothing is the worst. Yeah. So the trade deal, if we can say, maybe it comprises of at least 2 or 3 things. First one, about tariffs. The second one is non-tariff barriers. Number 3 is beyond these 2 things, maybe the long-term setting of the U.S.-China relationship. So tariffs, for sure. If the U.S. can lower additional tariffs to a reasonable level, that's good for China.
What's reasonable?
Now we have a weighted additional tariff around over 30%. The reasonable one should be at least 10 BP or even more cut from the current level. But it's very, very challenging because clearly it's up and down, right? Number 2 here is about China. Actually now U.S. only accounts for 10% of China's total exports for now,
right,
versus last year, 15%. So that's why China's diversification strategy plays a big role in delivering the resilience for the exports and also the implications for the economy. It will continue. That's why China's kind of reliance on U.S. market is diminishing. That's good news for China. But again, still very, decent, right? 10%. That's why lower tariff will still be positive.
Can I ask you a final question on, so we had retail sales, which I think we got the other numbers and somewhat got buried. So 3%. How would you describe the state of the consumer? Let's say if you remove all the subsidies, what do you think are we looking at here?
Yeah, definitely. The key focus is trading subsidies. Okay. And we have a problem, which means in Q4 we have the super high base effect for the trading subsidies. So last September in Q4, China delivered 150 billion RMB in trading. In Q4 this year, we only have 69 billion. Wow. That's a huge difference, right? So people are looking at, okay, what's next? Which means in Q4, merely maybe nothing, just following through the previous plan. But for next year, the bottom line expectation could be another year of trading subsidies or something like that, and to at least support the consumption for another couple of quarters. But eventually, trading is a one-off, which means
so much you can trade in.
That's why we still need some expansion of the trading subsidies, like durable goods from durable goods to non-durable goods, even for services. So that will be more reasonable. And looking beyond, still what matters the most, income growth and the housing prices for wealth effect, and also the social safety net to anchor expectations, bring down the saving rate.
Ning Zhang, it's great to have you on the program.
Fantastic.
Senior China economist at UBS Investment Bank. We just want to bring you some breaking news that happened in this last couple minutes in the face of all this. Oh, we're zooming in very close and hard on the Nikkei because look at that.
Wow.
So NHK reporting that the ruling party, LDP, has effectively agreed on a coalition deal. We've been waiting for this all weekend, really, essentially. And this does at least, I think, ensure that Takaichi could be the prime minister, possibly. At least the chances are higher.
So
now.
the Takaichi trade,
yes,
right? That emerged about, I forget now, about two and a half weeks ago. That somewhat was put in doubt, but now we have more clarity on this. Not so much movement on the currency itself. We've been trading at about just below the 151 handle. By the way, we dipped below 150 in case you missed that late on Friday. But yes, it's really more an equity market story, and this, the market is trading on the back of this 3%. I'm curious to see what the sectors look like. We'll do that on the other side of this break. Just very quickly, too. We do have an update on the incident at the Hong Kong airport this morning, and the Hong Kong airport is now saying that flights will operate as normal on Monday. This briefing, of course, that is live taking place there at the airport following a cargo jet that skidded off the runway in the early hours of Monday. More on that in a moment. This is the China Show. Welcome back. We're about 45 or so minutes into the cash markets. Well, 48. And we're now looking at, quite a decent run across the cash markets today. Pivotal political gathering, of course, taking place in Beijing this Monday. You have the fourth plenum set to review, of course, the main themes of the 15th five-year plan.
And really, when it comes to the data that we just got for activity numbers in September, I mean, there were some surprising beats, right? We talk about industrial production at 6.5%. Yes, you're still seeing pretty weak investment side of things, but you are seeing, as UBS just told us, right? Exports, industrial side of things are still looking quite strong. But yes, this dichotomy, he says, there's still quite a gap that we're still seeing in this economy here right now. But I think the market for now, at least, is seeing a bit of reassurance in some of these numbers as well. In terms of what to look out for in this five-year plan, what sectors might be in focus, let's bring in our stocks team here. Byun Song joins us now to tell us what traders are really watching out for this time around.
Yeah, I think so far the investors are really focused on these areas, including technology, AI, consumer, anti-involution, and also some potential signals around the Yuan globalization, as now like the tech reliances, self-reliances, and also promoting consumption-led growth, and also curbing price wars are seen as the priorities for the China's economy right now.
So which areas are likely to deliver surprises? So which specific names or areas might actually gain on any announcement here?
I think so far you're not really going to see too much surprise in the technology sector, as that is already widely expected. Right. But for consumer, it is possible because the market hasn't really yet pricing a really aggressive policy yet. But now with the lukewarm Golden Week holiday spending and also the external affairs that China has seen, the chances for a stronger policy stimulus is now really up.
Yeah, we're talking about those trade-in subsidies and the like, right? That seems to be waning now in the fourth quarter. So anything that can add to that narrative that they're doing more on the consumption side. I want to kind of turn a little bit more. There's another trader's guide that you guys came out with. It's quite interesting about how to kind of position around export curbs around rare earths, for example. What's sort of the verdict there?
Yeah. I think that China has taken a really big control of the rare earths industry, with the miners taking up for 70% and 90% of the processing. So their curbs on it has a really big impact on the sectors, especially including those automakers, renewables, semiconductors, and also defense. And what we have been seeing so far back in May is that those curbs has already led to a temporary shutdown of a Ford factory in Chicago. And that already led to a few companies going to see some alternative sourcings for those critical minerals. And that has naturally benefited a lot of those foreign miners. But also analysts are warning that we will need to carefully assessing whether those gains in those foreign miners are really sustainable, as it will take years for them to catch up their output with their Chinese peers.
Fantastic, Byun. Bi-Yun, thank you so much. Bi-Yun Song there, of course, with really a very nice summary of the two separate traders' guides. To one is the plenum. The second one is, of course, the rare earth story. Fantastic summary there from Bi-Yun. You can check that out on the Bloomberg terminal. One should be up on your screens very shortly. There we go. A trader's guide to China's biggest political meeting, of course, this year. Plenty more ahead. This is the China Show.
I got to bring you back to the so bad it's good narrative.
Okay.
We've been talking about it for quite some time. We've had, unfortunately, a little bit of a data deterioration starting back in April.
Okay.
So we had good 6 months since fourth quarter last year.
Right.
Up until now, things have not been exactly as I think the market would like to see. The biggest and most resilient part of the China housing market at the moment is the higher end market. So upgraded housing demand. If that part of the market started to moderate, I would worry about what the thesis would be and what continuously would drive the stabilization and the recovery. But at the moment, that's what's holding the market up.
Yeah, that was from our earlier conversation in the last hour with Michelle Kwok out of HSBC, of course, as the data on home prices dropped and their initial reaction to that. Now, since then, of course, we've had also a flurry of other data that's come through. Property prices, property stocks are on the way up. We're also getting a line coming through here out of the National Bureau of Statistics talking about how they're saying that maybe the way it's phrased is maybe expect a stepping up of the counter-cyclical adjustments there. No context yet. I promise you we'll get more context on that once we have more information coming through out of the NBS. Okay, apart from that, we're looking at Chinese life insurance, China Life guidance there, really leading to a rally coming up on your screens very, very shortly across the insurance stocks across mainland China and here in Hong Kong after the profit jump in the forecast and guidance there. Oz rare earth stocks also coming up shortly on your screens. And of course, we've been talking about rare earths as we go into this pivotal meeting, of course, next week. And of course, there's also a separate meeting along those lines between, of course, Donald Trump and his Aussie counterparts there.
Yeah, that seems to be sort of what's driving a lot of this sort of risk here this morning is that, both sides have really kind of seemed more optimistic that this meeting is going to happen in South Korea. And maybe we've kind of taken a step back from really escalating tensions further. So that certainly is one reason why maybe rare earths are doing particularly well here today. On the back of that, you also have this China data where you actually did see some modest improvements in certain segments, right? Industrial, output and profits and the like. So industrial output, I should say, was sort of the standout here.
6.5.
Yeah. So enough for at least this rally to continue. Plenty more ahead. This is Bloomberg. 11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break, and yeah, we are looking pretty good in Tokyo here right now. Close to 3% gains in the Nikkei, and this is what we heard from NHK in just the last couple of minutes, that the LDP ruling party as well as Ishin have agreed to form a coalition. So that actually does in some way show us, and it will set up for Sanae Takaichi to become the country's first female prime minister. In terms of some of the top sector gainers and the topics, for example, of course, we're focusing on this kind of Takaichi trade, right? That seems to be reemerging in a big way once again. So we're
other products index.
Other products index.
All of the above.
Electrical appliances, rubber products, info and communications, all looking pretty good. So it's a broad rally that seems to be underpinning now.
Yeah, if I'm theoretically, if I'm on a dating app, and what are your strengths? Other products, everything else. I tick that box, but not the usual things.
Makes you eccentric.
Yeah, there we go. Very balanced. All right, let's get to the thick of the story here. More details on this. So, NHK, as Yvonne was just pointing out there, says that the leaders of Japan's ruling LDP, Liberal Democratic Party, and the opposition Ishin Party have now reached an agreement to form this coalition. Now, the move is set to pave the way for Sanae Takaichi to become Japan's first female prime minister. Let's bring in our Japan politics and economics reporter, Sakura Murakami, here to help us understand. So, Sakura, good morning, and thank you for joining us. So, what can we now put behind us, and what lies ahead? I guess let's start with the first question there.
Well, I mean, the Ishin's co-leader Yoshimura just spoke just now. Actually, he was saying we pretty much can expect agreement today. He said he wants to sign the coalition agreement today. So that's certainly something that's on the cards. And what reports are saying, though, is that the coalition won't include it will sort of be what's called an extra cabinet coalition. So Ishin won't actually provide any members to be included in the cabinet. So they're taking sort of a wary stance and seeing how effective the LDP will be in actually carrying out some of the kind of clauses and sort of agreements they have within the coalition. And this will include reducing the number of lawmakers there are, which is going to be very hard for the LDP to kind of carry out with a lot of opposition there, and also a temporary reduction in the sales tax. So these are kind of sticking points that we'll have to see how the LDP handles over the government of Sanae Takaichi.
Yeah, it seems like we mentioned on that graphic there, 233 is the majority. The two parties hold about 231 seats in the lower house of parliament. So we're shy of a majority of some sort. But it seems like Takaichi will likely be voted still as prime minister tomorrow. What else can we expect in the coming days?
Yeah, that's right. The ruling coalition, well, what will be the ruling coalition will still be 2 seats short of a majority, but that still puts Takaichi very much in a good position to become the prime minister, because you only need a simple majority to become the prime minister. But there's still some, there'll still be issues and also kind of focus on the cabinet that Takaichi will form, especially in terms of there have been leaks over the over the last few weeks over who will become, for example, the foreign minister. Toshimitsu Motegi's name has come up for that. There's also been focus on where Yoshimasa Hayashi, the former chief cabinet secretary, will be, and also Takaichi's rival Shinjiro Koizumi, and how he will be placed in the cabinet as well. So there'll be a lot of focus on what the cabinet makeup is and what that's going to say about Takaichi's long-term government as well.
Okay. And there's an upcoming meeting, of course, with U.S. counterparts. It's really part and parcel of this dizzying next 1 or 2 weeks on the geopolitical front. What are some of the challenges then that Takaichi will face, I think, domestically and also in terms of foreign policy here?
Yeah, I mean, she's still on kind of shaky ground in terms of, not having the majority quite yet. Also, as you mentioned, President Donald Trump will possibly be visiting Tokyo next week. There have been reports that he'll be in Tokyo next week, and that's ahead of an APEC meeting that we're kind of largely expecting that the new Prime Minister Takaichi will probably be attending as well. So there's a lot on the diplomatic front. Separately from that, inflation's just been a big issue for the public in general. There's still the outstanding sticking points between the Ishin and LDP as well. So that's going to be, they might have agreed to a coalition for now, but that might be something that's kind of comes back to bite Takaichi in the long run. It's going to be simmering away in the background, and whether she can really sort of assuage fears, address inflation, these are going to be issues that she's going to have to address in her government.
Sakura, thank you. Sakura Murakami there joining us with the latest out of Tokyo. We got plenty more ahead. This is Bloomberg. Israel has launched strikes against Hamas in Gaza and reportedly suspended all aid shipments, and this after accusing the group of an ambush that left 2 Israeli soldiers dead. And now Israel has blamed Hamas for breaching the ceasefire agreement brokered by the U.S. as President Trump urges Hamas to disarm.
We're going to find out. So it's not a hard timeline, but it's a line in my own mind. And at a certain point, if they don't do what they're supposed to do, then we'll have to do it for them.
All right, let's bring in our news desk editor, Balazs Pence, who has the latest for us now here. It seems like we're seeing cracks in this whole ceasefire here. What's the latest, Balazs?
Well, Yvonne, this is the first big test of the ceasefire that was hammered out by President Trump, and we had the big ceremony with all those leaders from around the world coming together to show their support for this deal. And I think this is kind of what everybody was worried about, the two sides kind of falling back into old patterns of blaming each other, exchanging fire. The good news for the ceasefire is that both sides have said, and the president himself has also said, that the ceasefire itself is still in place, and they both said that they would stop fighting after this kind of brief exchange of blows over the weekend. So there is some hope that this can continue, but this whole episode just shows how complex and how difficult it might be to maintain a ceasefire and to move ahead to kind of a broader peace agreement based on this.
Balazs, is there? I mean, obviously, we've heard from the Israeli side, and what they're saying is they're pointing to the other side. What I'm trying to get to is, is there a path between the point today that takes us into a further escalation that puts everything at risk?
That is certainly the concern, David. And there are voices within the Israeli government that suggest that maybe Israel should be more forceful in dealing with Hamas, in dealing with what's left of Hamas. And let's remember, the agreement left a lot of open questions, including will Hamas disarm, and will Hamas give up control of the Gaza Strip, and who will end up governing Gaza. So that is indeed the crux of the matter, and that is the most kind of volatile issue right now before the group can move forward to a broader peace agreement. So there is a risk. But like I said, there is good news, as both sides seem to want to continue with the ceasefire, and they both still consider the ceasefire in place, even though there have been some violations and it is fraying somewhat. So right now the question is whether the international response will hold together, whether the large group of nations that supports that ceasefire agreement and wants to work toward a broader peace deal can stay together, or whether that will start fracturing. We don't see any sign of that happening right now. So the signs are positive so far.
Balazs, thank you for the update. Balazs Pence there in our newsroom here in Hong Kong. Let's get to some other stories that we're following at this point in time. And yeah, this one in Paris, really something we woke up to today. So the Louvre was actually shut on the weekend after several pieces of jewelry were actually stolen in this daring daylight robbery. Several individuals are suspected of using power tools to cut through windows in a furniture elevator to then enter the museum. And the thieves broke into the Apollon Gallery, which houses several of the French crown jewels, stealing 8 objects, including a tiara, necklaces, and also some earrings. One piece of jewelry was recovered during their escape. Now, the U.S. has formally imposed a 25% tariff, or 25% tariffs, plural, on imported medium and heavy-duty trucks and parts, along with a 10% tariff on buses. The directive prolongs a key tariff reprieve for automakers that manufacture and sell finished cars within the U.S. Meanwhile, India says it is making solid progress in trade negotiations with Washington, with both sides narrowing their differences on trade-related matters. Now, President Trump has accused Colombian President Gustavo Petro of being an illegal drug dealer and says that the U.S. will halt all aid to the country. Trump wrote on the social media Truth Social post you see on your screens that drug trafficking has become Colombia's biggest business, and Petro does nothing to stop it. The announcement follows Trump's September decision to decertify the country as a partner in fighting narcotics. Petro has hit back, saying Trump is being misled by advisors.
All right, we continue to watch what goes on in Japan. We're well into that lunch break here right now. But yeah, Nikkei futures are punching a nice sort of 3% gain here right now. In the back, what we heard from NHK, local media reporting that the ruling party has reached a coalition with the opposition, Ishin. So certainly that is why we're seeing this Takahashi trade come back in a big way here right now. Let's bring in our Japan stocks reporter, Alice French, to talk us through what they're seeing in terms of the price action here. Seems like a lot of optimism about this news today, Alice. What's next?
Absolutely. I mean, as you mentioned, we're seeing the Nikkei up around 3%, already hitting those intraday highs, beating the records that it set earlier this month. And I mean, even before we had that NHK headline this morning, you know, the optimism was really there. I think basically we're seeing that Takaichi trade really coming back into play, right? People expecting that she will end up as Prime Minister. We know that she has a pro-stimulus stance. She wants to pipe more funding into things like defense, tech, cybersecurity, energy, seeing, you know, all those sectors up across the board this morning. Now, of course, the question is, you know, if she is then elected as Prime Minister as expected, will those gains already be factored in, and might we even see a slight kind of slowdown in momentum later in the week? That kind of remains to be seen, but at least at the moment, people seem to be very optimistic about Takaichi as Prime Minister, and stocks are really benefiting from that.
Okay, so can we be confident now? This Takaichi trade has legs. What's the risk now to watch?
Yeah, I mean, I think it will very much depend on kind of the sort of moves that we see in JGBs and the yen as well. We know that we're, you know, less than 2 weeks really away now from that BOJ policy decision. And I think a lot will also hinge on that. We know that obviously the expectations of another rate hike this month have gone down quite a lot since Takaichi became head of the LDP. So that'll be something that people will be watching. I will say that banking stocks are doing pretty well today. I think that's partly on kind of tailwinds from the US, and as, you know, things have kind of calmed down from those worries that we had over credit in the US at the end of last week. But I think banking will be a really key one to watch in terms of how the mood is going forwards. But I think, you know, talking to fund managers here, it definitely seems like people in the mid to long term are expecting those tailwinds to extend under Takaichi, and for, you know, the records to keep coming towards the year end. So I think once we have that confirmation and investors can really kind of position themselves and they have that clarity on domestic politics, we could see another leg higher. But of course, BOJ kind of still going on in the background and still remains a potential risk, I suppose.
Alice, thank you so much. Alice French in Tokyo for us. That really takes us into the closer milestone, perhaps this week, as far as the Japan macro story is concerned. We have inflation numbers coming through on Friday, and of course that maybe informs us even further of the BOJ going into next week. Right, plenty more ahead. This is The China Show.
Time for a quick look at what's making headlines in China's national newspapers. The party's fourth plenum is in focus today, with papers like the Global Times playing up its global significance. And today's editorial says the world is looking to the gathering for more good news, with geopolitical risks and protectionism on the rise. It says the plenum shows China is focused on managing its own affairs well, contributing, quote, greater stability and positive energy to the world.
Yep, and on the front page of the People's Daily, President Xi congratulating Taiwan's Chang Li-wen on being elected chairperson of the opposition party KMT. And a state media says Xi expects the party to help deepen cross-strait exchanges and cooperation and advance reunification.
Yeah, now Chang is a former lawmaker who has called for closer ties with China and has won the race to become the leader of the island's biggest opposition party. Now, she won with just over half of all votes and will be the third woman to lead the KMT. The KMT is Beijing's preferred negotiating partner because it favors eventual unification with China.
Now, let's turn our attention to Canada. And Prime Minister Mark Carney says that he has learned a lot from President Trump, including balancing things like climate goals and renegotiating trade deals. He spoke on the first episode of the Michelle Hussein Show and how really last year has really changed him.
We have the best trade deal at the moment. 85% of our trade with the United States is tariff-free. We have the lowest average tariff against of any country with the U.S. It's 5.5%. So we're in a good position now with two important caveats. One is your question, what's going to happen with the renegotiation of what they call USMCA? And secondly, some key sectors, steel, autos, aluminium, forest products being the main ones. Those issues are quite related. Our view is that the renegotiation, it's not formally a renegotiation, it's a review, but I think we should recognize that in effect there will be a renegotiation of some elements of USMCA because the president has signaled that desire. Our view is that a deliberate process, which has begun now with the consultations, including the United States, will make it increasingly clear that in certain sectors, particularly, the integration of the Canadian and U.S. and Mexican economies is essential to U.S. competitiveness. So in steel, in autos, as two examples, that the linkages are so tight. They're so tight such that the the U.S. content in Canadian finished automobiles is higher than the average U.S. content in American automobiles. So we make America stronger in these sectors, and our strategy is to make sure that that is as well understood as possible.
Okay, so the prosperity of both countries is at stake. Your language, though, has changed on President Trump since you came to office. Do you remember when you talked about him as a bully that needed to be stood up to? In February, when you were campaigning, we're going to stand up to a bully, we're not going to back down. And yet now you're much more likely to talk in more conciliatory terms. I mean, obviously, one is campaigning and one is governing, but perhaps people who wanted you to do the standing up to the bully might feel that you haven't done that as much as you suggested when you were campaigning.
Well, let's be clear the actual situation. We're one of there are two countries effectively that put retaliatory tariffs on the United States. Two countries in the world. We put them on, we kept them on up to a point where they ceased to be effective. We got to a point when we took our retaliatory tariffs off, we had 85% of our trade tariff-free. When we put them on, given the steps that President Trump had taken, it was a third of our trade was tariff-free. So, strikes me that that's pretty effective.
But he has shown his power, hasn't he, over you? Like, for example, your digital services tax. You announced it, he hated it. You had to back down on that.
The digital service tax was announced multiple years before. It was just effectively coming in. It was coming into effect. Look, the United States.
And it couldn't, because President Trump wasn't having it.
Well, we made a decision in the context. And let's what happened after we took that digital service tax off? Within weeks, the president confirmed, in writing, formally confirmed in an executive order that tariff-free status for the vast majority of our trade.
So there was something broader at stake
There's something
on trade. I get
very
that.
much broader at stake.
And you can listen to the full conversation between Michelle Hussein and the Canadian Prime Minister. Just search for the Michelle Hussein Show wherever you get your podcasts.
Yep. Just very briefly before we wrap up this show on Monday. So it's a good day to be long these risk assets, and certainly the HS Tech rally at 3.5% does underscore that point, some more than others, certainly across sector groups. So apart from Chinese tech, we're also looking at Japanese markets catching a very strong bid on the back of positive and encouraging developments over in Tokyo as far as politics goes. As far as data goes, though, mixed bag, mostly disappointing with the exception of a few really bright spots on the data front. So the home prices that came out, reacceleration of the drop there, as you see on your screens, negative 0.4% is the fastest drop in new home prices on aggregate going back to around this time last year. On the industrial profits, industrial production, do we have that graphic up? Let me just tell you, the 6.5%, beating every single, beating it by a mile, even the highest estimate.
Yeah, that's a standout really in that data, and it seems to be enough for this rally to continue after what we saw on Friday, which was quite a bit of profit taking. I think the narrative was, we're getting closer to the plenum, maybe we should take some money off the table leading up to that. But today, I think, given how trade tensions and the like seem to be cooling down a bit, that certainly does help overall in terms of sentiment. Gold, that's probably why we are seeing that sell-off on Friday when it comes to this rout in gold and silver and the like. We were looking for some sort of trigger and what could kind of derail this sort of rally. This has been insatiable, right? Right now, we're seeing a bit of a recovery from some of the lows, right, in the last 3 days or so. And there are still strategists out there that are still quite optimistic about where gold prices can be. HSBC certainly is the latest one who just upgraded their forecast to 5,000 when it comes to gold prices there.
Yeah, I'm looking at that specific graphic, but they're pointing to the usual sort of catalyst as far as demand and inflows those are concerned. So we're now looking effectively at maybe a consensus north of 4,800 for gold prices moving forward. Now, we're going the opposite way, though, because the equity complex on the precious metal space has also become very, very stretched. And I think when you look at some of the gold plays coming up on your screens, not this one, there's another one. Do we have the names of the gold miners, too? Because also separately, there's an earnings reaction to Zijin Mining and Zijin Gold, right? So I think that's one really area of the market that we're watching closely as well today.
Yeah, at least for now, things are looking a little bit better, right? And I think we are coming up and at least recovering from some of the big drops that we saw on Friday, particularly when it comes to tech, right? When you're starting to see big moves in some of this growth stocks once again. Last week it was all about style rotation, right? Maybe it's time to pivot into more of the sort of value plays here right now. But there you go. There we have right now the gold miners, Dave, as requested there.
Oh, there we go. Almost like fast food. Okay, now making me think of lunch. Just a note, so as you look at the big tech names coming up on your screens in China, Morgan Stanley came out with a note. We fleshed this out pretty late last week, but they've really come out with a fairly straightforward advice here, not to aggressively buy the dip. Lean towards A shares according to Morgan Stanley's equity markets team when you look at China. Anyway, that's it from us here on The China Show. Insight with Linda Amen is coming up next.